Good afternoon. So today we are going to look at a topic called tax practice in Nigeria. Tax practice in Nigeria. In this topic, the first area we are going to look at, we look at tax practitioner. That is the first area. The second area, we are going to look at tax administrators. Why the third area, we are going to look at impact of information technology on tax practice in Nigeria. So when we talk about tax practice in Nigeria, we are looking at what is the role of tax practitioner. That means the tax consultant. Also, what is the role of tax administrators? And what are the impact of information technology on tax practice in Nigeria? So that is what this topic centered on. We start with who is a tax practitioner. Tax practitioner, they are the independent firm licensed to provide tax-related service to their clients. Independent firm licensed to provide tax-related service to their clients. Who is tax administrators? Tax administrator, they are the revenue agency, the authority, which are mandated to assess, collect, and amount for taxes on behalf of the government. They are the revenue agency or authority that has the mandate to assess, collect, and amount for taxes on behalf of government. Now, what are the current role of tax practice firm, which is what are the role of tax practitioner? As a tax consultant, what is your own role? What are the roles that you need to play? When you own a tax practice firm, what role do you perform? What are the services do you perform in your firm? Number one, preparation of tax record for clients. Tax practice firm, they help to prepare tax record for their clients. Tax practice firm help to prepare tax record for their clients. Another role, computation of end of year tax liability. Tax practitioner, the tax practice firm, they also help clients to compute end of year tax liability. What are the end of year tax liability? They help them to compute capital allowance, they help them to compute company income tax, they help them to compute hydrocarbon tax. This is end of the year tax liability. They also help them to compute personal income tax on behalf of their employees. This is one of the roles of tax practice firm. Another role of tax practice firm, filing of tax return. They help their client to file tax return. A tax practice firm help their clients to file tax return as at when due. That tax return can be monthly tax return, like value-added tax, withholding tax, personal income tax. It can be annual tax return, which is company income tax, hydrocarbon tax. All these are what? Annual tax return. So filing of tax return is one of the key roles of tax practice firm. Another role, of tax practice firm is advise client on tax matter. Tax practice firm, they advise clients on tax matter. Anything that have to do with tax matter, they provide advice for them, like transfer pricing regulation, transfer pricing transaction, and some other international tax policy. They also assist clients to comply with tax legislation. Tax practice firm assist clients to comply with tax legislation. This is one of the role of tax practice firm. Another role of tax practice firm is resolution of tax disputes. They help clients to resolve any tax dispute they have with tax administrator or tax authority. This tax practice firm, they also perform another role called management of tax audit and investigation. They help their client to manage any issues that have to relate to tax audit and investigations. So this is the role of tax practice firm. You may be asked, what are the role of tax practice firm, or what are the role of tax consultant? What are the role of tax practitioner? We have listed all the role. The next thing we need to look at is this tax practice firm. This is the role that we mentioned earlier. We can divide it into 4 elements. The role of this tax practice firm can be divided into 4 elements. The 4 elements is called element of tax practice. These roles we have mentioned earlier, we can divide it into 4 elements. The 4 elements is called element of what? Tax practice. What are the 4 elements? What are the elements of tax practice? Let's list them. What are the elements of tax practice? We have the 4 elements of tax practice. Number 1 element of tax practice is called tax compliance. Number 1 element of tax practice is called what? Tax compliance. Tax compliance simply means gathering of relevant tax information, filing of necessary tax return, helping clients to classify information. They help their clients to classify some informations. So tax practice. So when we look at element of tax practice, you divide it into 4. 1 is called tax compliance. Under the tax compliance, we have filing of necessary tax return, helping client to evaluate and classify relevant tax information. And the third one out of that is gathering of relevant tax information. They also help under tax compliance. They also help clients during tax audits and investigation. Under the tax compliance, they also help clients during tax audit and investigation. This is one of the elements of tax practice. When you said you are into tax practice, you have a tax practice firm, your job is divided into 4 elements. 1 is called tax compliance. Why the second service that you render is called tax planning and advisory. So the second element of tax practice is called tax planning and advisory. What is tax planning? In this tax planning and advisory, we are helping clients to arrange their transaction. We are helping clients to carry out tax planning so that they can minimize their tax. We also help them to classify some of their transactions to reduce their tax exposures. So this is under tax planning and advisory. The third element of tax practice is called tax litigation. The third element of tax practice is called tax litigation. What does tax practitioner do under tax litigation? Tax practitioner help client to settle that tax dispute with tax authority, either in the court of law or in the tribunal. Through under the tax litigations too, they provide technical and expert witness in the court of law for their client. They serve as a witness for their client in the court of law. Under tax litigations too, they act on behalf of their client when necessary. Acting on behalf of client under tax litigation, the third element of tax practice. Tax litigation is the third element of tax practice.
No way to go. Show up. Not for me. God damn it. You're gonna let him get away?
Please.
Let's go. Put away and say this. Do you remember at the end for Rule Cover 2? Said you never saw my movie. I know. I've seen them all. They're classics. For the one moment that really cuts through them all has been Rule Cover.
Please, let's try to mute our audio.
Uncle Cyril, I beg now.
So, the fourth element of tax practice that we have is called tax research and intelligence. Tax research and what? Intelligence. This is the fourth element of tax practice. Tax research and intelligence. What does tax practitioner do under tax research and intelligence? What do we do under tax research and intelligence? What do we do? Identify a tax problem. One of the roles of tax practitioner under the element of tax research and intelligence is identify a tax problem. Every issue, every situation has a problem. So you must identify a problem. It's when you identify a problem, you can provide solution to the problem. Without identifying a problem, you can't provide solution to the problem. Gathering of relevant tax information. Gathering of relevant tax information is also one of the responsibilities of tax practitioner under tax research and intelligence. Another one is provide solution to the problem. You help to provide solutions to the problem. This is also one of the function, one of the responsibility, one of the role of tax practice firm under the fourth element, which is called tax research and intelligence. Now, the next area we need to go. What are the key reasons why a tax practice firm leverage on technology? Why does all this firm of chartered accountant, firm of external auditor, firm of tax practitioner, why does all these firms make use of technology? Why does all these firms make use of IT, information technology? When we talk about information technology, some of them, they are making use of Excel. They are using computer to analyze data. They are using Word. They are using some accounting package. They are using all this software. Some of them are even on social media. Social media is a technology on its own. Why does a tax practice firm, what benefit do we think all this information technology can give to a tax practice firm? Number one benefit is many more clients. It helps technology, information technology, assists tax practitioner to get more clients. Because when you are IT inclined, That means you are up to date. Even in accounting profession, despite that you are a qualified accountant, you need to have IT skills. IT skills. Because this accounting profession is dynamic, it's not static, it's changing day by day. What we are taught 15 years ago is not what they are teaching them again, especially in financial reporting. So many things have changed, even in tasks. Technology is driving accounting. You have to have knowledge of some software. You have to know how to use Excel. If you call yourself as an accountant, you don't know how to use Excel. You don't know how to operate laptop. You don't know how to use some accounting package. You don't know how to do some of the data analytics skills. You are not an accountant. You are not a digital accountant. You are an outdated accountant. Because most of the industry now, they need somebody that know much on IT, apart from having accountant. Having ICAN certificate is not, you cannot do it alone. You have to add value, IT skills to yourself. So likewise too, those who are in the practice firm, if they have more knowledge of technology, IT, they will gain more clients. They will gain more clients. More people will hire them because most of the job that they will be helping them to do, they will understand their software. If you want to go and audit a company that makes use of accounting software, you have to know the software they are using. You cannot audit without understanding the system. It will be very hard. So another benefit of IT to tax practice firm, another benefit why tax practice firm leverage on IT is that it helps them to retain more clients. So most of their clients will stick with them. They will retain their clients because they are using modern technology to analyze their data to carry out their service. Cross-selling service is another benefit why a tax practice firm need to leverage on IT. Selling service. Apart from providing accounting service, apart from providing tax service, you also provide some service that require the use of IT, like training their staff on how to use some accounting package. Giving some advisory, helping them to install accounting software. Another benefit that IT will give to tax practice firm is time saving. It helps tax practice firm to save their time because the data that they will generate using IT, take for instance, the data that they will generate using software like Microsoft Excel, when you want to use it to compute capital allowance, it will save your time than using manual, writing it, using calculator to calculate. Excel, once you know how to use the formula, it's going to calculate everything without pressing calculator. If you want to help your client compute adjusted profit, using Excel will save you more. If you want to help a client to analyze their bank statement, using Excel will save you more. It will save your time. You will finish on time rather than writing it on paper, pressing calculator. Life have gone beyond that. I don't know when last I use I use all this manual calculator. If I want to calculate, I use my Excel while working. Life have gone beyond stressing yourself. Cost saving, it saved their cost. It saved the cost of tax practice firm. Sometimes tax practice firm need to print on working paper, print some document, print this. But right now, with the use of IT, all we need, once you finish the job, save it online. Save it. If you have a cloud, save it on your cloud. Save it on your Google Drive. So it is cost saving in the long run. Mobility of service. It helps tax practice firm to carry out mobility of service. If you're a tax practice firm, you want to help your client to file value-added tax return. Even if you travel to Maduguri, if you have your laptop, you can file the tax return there. Because what you need to do is to log into the tax promas of your client using the login ID to the task flow. If that place they have internet, you will do your job. You don't need to do your job in your office. You don't need to say, let me go to client office. No, you can do it at any place so far as you have your laptop with you. So mobility of service is one of the reasons why task practice firm is saying, let's make use of information technology. Increase task audit skills. This one help the task administrator to improve task audit skills. If they want to do task audit, it improves their skills. It helps them to do their job diligently. So this is the reason why task practice firm leverage on technology, or these are the benefits in which technology will give to task practice firm. Now, the next area we are looking at is what is the possible legal and ethical issue arising from task work. When you are you are a task practitioner, you are a task consultant, what are the possible legal issues that you may face or ethical issues that you may face while carrying out your task job? One of the ethical issues that you may face is failure of task practitioner to have technical competence. Failure of the task practitioner to maintain appropriate level of professional competence. This one is called technical competence. One of the key quality, we call it quality of an accountant, of a professional accountant, apart from integrity, apart from independence, apart from confidentiality, we are talking of technical what? Competence. Is one of the ethical issues in that ICAN lay down to their member, that their member must have. Technical competence means, as an accountant, as a task practitioner, you must have updated knowledge in the area of tasks. You are a task practitioner. You are the one rendering task service to clients. So many people depend on you. So many people are looking up to you that, this is our task practitioner, this is our task consultant, who is the one that will give us advice on what to do. You need to have updated knowledge in your field. Task is dynamic. It's not, I'm sorry to say, it's not some other topic. Don't let me mention. Task, you have to update your knowledge from time to time. Look at it now. When we talk about technical competence, for you to say you are a good task consultant, you are a good task practitioner, you must have updated knowledge in the new task law that was just signed, which will commence by January 2026. All those new 4 task law, you must have read it. You must have do a write-up on them. You must have know how you will apply them in practice. Nigeria Tax Act, Nigeria Revenue Service, Joint Revenue Service Act, and Nigeria Tax Administration Act. You need to know them. You need to know what changes is it going to have, what impact is it going to have on companies. That is what is called technical competence. Technical competence is not about reading alone. You need to be going to workshop, adding knowledge, attending workshop, attending training, getting updated knowledge. Nobody knows it all. You can't say you know it all. You have to seek peer review, seek knowledge, attend. So ICAN has make it easy. Even despite you have a qualified accountant, after you have qualified, you have been inducted, you still need to be attending a training that called NCPE, mandatory continued professional what? Education, where you will be updating your knowledge. It's also in task too. The the professional body on taxation, CITNs too, they have NCPE. When this new tax law was signed, CITN, they have organized several workshops, which is free for their member to attend every Thursday. they normally do a workshop that they will be deliberating, they will be discussing on some issues on the new tax law and how the issue is going to be resolved. That is what is called technical competence. When you fail to have technical competence, it's against the ethical issue of a profession. It will affect your job. Another ethical issue, another possible legal or ethical issue arising from tax work is reasonable inquiry. Failure of a tax practitioner to make reasonable inquiry. Inquiry means to ask information while you are doing your job, while you are performing your role as a tax practitioner. If you need some document before you can conclude your tax computation, before you can conclude your tax return, ask the client to give you document. If they give you some information, if they give you some document and you didn't understand some figure, some items in those documents, you need to ask, seek for information, make inquiry, ask, and do documentation. Document. Because if you go and mislead client or you go and compute a tax and you submit it to tax authority now discover some loopholes in your tax computation, the client will blame you. That means you are not a professional. So before you make conclusion on your job as a tax practitioner, you must make a reasonable inquiry. So failure to make reasonable inquiry is one of the ethical issues that may affect your tax work. Another ethical issue that may affect your tax work is when you are advising your client to engage in tax evasion. You are the one advising your client. You are the one helping your client to carry out any form. You know, tax evasion is illegal, it's criminal, it's against the law. You as a tax practitioner, because of the profession you belong to, one of the key values of your profession is talking of integrity. You have to have integrity. Don't be the one to be advising your client on how to engage in tax evasion. You know it's against the law. Once you do that, if the law caught you, can be arrested. You too can be arrested. You can be prosecuted because you are the one advising your client to engage in something that is illegal, something that is criminal. So advising client to engage in tax evasion or continue to act for client misleading, giving client misleading information is one of the ethical issues affecting tax work, affecting tax practice. Another ethical issue that may affect your job while doing tax practice firm is supervision of tax audits. When you fail, you are the one that render tax service to your client. You are the one that help your clients to compute capital allowance. You are the one that help them to compute their value-added tax. You are the one that help them to compute company income tax. Tax authority now give notice of tax audits that they want to come and perform tax audits in the client premises. You're supposed to be there. You're supposed to represent client. You're supposed to be helping the client to speak. And if tax authority raise any tax query, you're supposed to be the one to help client to reply the queries. But during the tax audit, you fail to show up. What are you paid for as a tax practitioner? What are you paid for as a tax consultant? You did not show up. You did not attend the tax audit. It's against the ethical issue. It's because representing one of your role is to help your clients to settle tax audit issue, to help them to represent them when there's issue of tax audits. You fail to show up. Well, what are you paid for? So this is an ethical issue that may affect your job. Another one, you are giving them misleading advice. You are giving them misleading advice. Some advice that will make them to make a loss, that will make the company to fold up. It's against the ethical issue. It's against the ethical issues of your profession. The professional body that you belong to, either you belong to CITN, either you belong to ICAN, go against this. Another ethical issue is soliciting for personal gain. You are soliciting for personal gain. You are paid. You are paid for job you want to do. Maybe as an external auditor or maybe as a tax consultant. Apart from the fee that they pay you, you now see that this client, they are making profit. They are enjoying. During the audit exercise, you want to go and audit the client. You are not asking for personal gain. You are looking for financial gain on the client. Maybe the personal gain you are looking for, financial gain, you go and collide with tax authority so that they will issue an assessment to the taxpayer. You are giving information about your client to tax authority. Tax authority now issue an assessment to the taxpayer. They ask your client, taxpayer, to pay 300 million. At the end of the day, you are the one that will also come forward. Don't worry, I will help you to go and negotiate because of your own personal gain. At the end, when you negotiate, tax authority give you your own share. In the long run, your client now discover, taxpayer now discover, you can be sued. Your client can report you to your profession. Your professional body can sanction you. That is personal gain. You are the one going front, going back. It's against the ethics of your profession. Personal gain. It's against the ethics of your profession. Personal gain. You are looking for some financial personal gain. As an accountant, as an external auditor or tax consultant, you went to client office. You did not close your eyes. You are looking at, this lady is financial gain. You don't need to do that. It's financial gain. Personal gain. You don't need to do that. Or you are asking them, please, I need an iPhone 15. It's personal gain. You don't need to do that. So it's against the ethic of the accounting profession. It's against the ethic of your tax practice. Conflict of interest. When you act in a conflict of interest, this one too against the ethic of your profession. Conflict of interest. You are the one that helped client to prepare that tax return. You are the one that helped them to submit their tax return. At the end of the day, you meet FRS too. FRS give you a job that go and audit these clients. FRS outsource the job to you that you should go and audit client. The client you want to audit, you are the one that also you are the one providing tax consultant for them. That means you are auditing your job. It's conflict of interest. You cannot act for two parties at the same time. It's against the ethic of your profession. Another ethical issue is failure to communicate to client. You fail to communicate to client when need. You fail to remind them when they need to file their tax return. You say, since you did not call me, they have engaged you as a professional. You are the one that's supposed to remind them. The new tax law will commence in January 2026. When the new tax law commence, you do not go and tell the client that the new tax law commence. So this is the new way you're supposed to do. This is the new rate for capital allowance. So this is the new rate for company income tax. So you did not tell them. That means you don't know your job. It's against the ethic of your profession. So these are the ethical issues. These are the possible legal or ethical issues arising from tax work. Now, let's look at significance of those ethical issues or legal issues arising from tax work. What are the significant? What are the likely penalty that may be sanctioned on you if you go against ethical issue while doing your task work. All these sanctions that will be sanctioned on you is going to be sanctioned by your professional body. If you belong to ICAN, ICAN will sanction you on some sanction, on some fine penalties. If you belong to CITN, CITN will sanction you too. What are the likely significance of legal and ethical issues in preparation of return and reporting? This means what are the likely sanctions? What are the likely fine? What are the consequences of you not following ethical issue? What are the consequences you are going to face? First, imposition of fine. The professional body you belong can fine you. You can impose fine. For you doing this, you are going to pay a fine of so amount. Tax authorities too can fine you. Another one, suspension from professional body. You can be suspended. You can be suspended. If a client reports you to your professional body that you collect money from them, you say you are going to give the money to the tax authority as PR, but tax authority say they did not receive the money, and you can't provide the evidence, you may be suspended. Suspension from the membership of the institute. Or tax authority publish your name as one of the tax consultants that normally help clients to engage in tax evasion. You may be suspended. There's likely that you may be suspended. Another one, expulsion from the membership of the institute. Some offenses, some ethical issues that you may go against may warrant ICAN to expel you from their membership. Maybe we see in the newspaper, one of the professional tax consultants were caught in a rape act. And when ICAN investigates, truly you raped the lady. There is no need for you to be suspended. Rape is a criminal offense. Don't ridicule our name. Don't say you are, media. What media will be reporting is, a member of ICAN was caught in a rape. That member of ICAN was caught. Media will not mention your name. They will attach it to your profession so that to ridicule your profession. Before you can ridicule the profession will have said, he has been suspended, he has been expelled. It's no more our membership.
I'm in class, Zikora. How are you? Go and play. I'm in class. I'm in class. Go to sitting room.
God.
Zikora, go to sitting room.
Mute your audio. So, expansion. Or one of the member, while rendering tax service or while doing audit, he went to client office. He went to go and steal iPhone 17 Pro Max, iPhone 18 Pro Max, iPhone of the client. One of the member was caught. So why will an accountant steal? For you to be an accountant, you're a professional accountant. You have qualified. God have made it for you. To me, this our accounting profession is one of the lucrative profession. Despite the economy is not balanced or something like that, but some accountants are still making it. Why will you steal? Some accountants are still earning good salary. Why will you steal? You have what you take to make it, being a qualified accountant, being an experienced accountant. They are looking for many experienced accountants, and they will pay you well. So why do you need to steal? So, a member of ICAN was called to steal. That means that have to deal with expansion from membership of the institute. Another consequence, withdrawal of certificate or license to practice. Maybe you are a tax practitioner. They give you license to practice tax. You now engage in unethical issue. They may withdraw your license. That means you cannot practice, you cannot do tax consultant job again. Sometimes you may be reprimanded. That means you may be charged to court. It's one of the consequences of going against ethical issues. So this is what we need to know on ethical issue in accounting profession. Now, the next area we need to go is, for the sake of time, let's look at tax administrators. Tax what? Administrators. Tax administrators. Tax administrators. What are the role of tax administrator? When we talk about tax administrator, we mean the tax authority, those who collect tax. FRS, LRS, they are all tax administrators. So what are their own role? What are the role that they play? What are the role that tax administrator perform? One of the role of tax administration is registration of taxpayer, registration and education of taxpayer. They are the one that register taxpayer. They are the one that register a company, a new company that just started a business. They will register them. They will put them in the tax nets. Education of taxpayer. This one is key. Right now, as I'm talking to you, the new tax law, the new tax reform act, which will commence by next year, FRS, LRS, what they are doing now, they are doing sensitization. They are educating taxpayers on what they need to know on the new tax law, so that before the new tax law commences, they will know what to do. This is one of the roles of tax administrators, registration and education of taxpayers. Another role of tax administration is receiving tax return filed by taxpayer. If taxpayer file tax return, it is tax administrator, it's tax authority, they will be the one to receive it and review it. They will receive and review to determine whether it's correct or wrong. So receiving tax return is one of the responsibility, one of the roles performed by tax administrators. Another one, assessing taxpayer. That means tax administration, they also be the one to determine the amount of taxpayer will pay. They raise tax assessment on the taxpayer. They are the one that will determine the assessment, the tax assessment taxpayer will pay. Is one of their roles. Another role is collecting, maintaining, and accounting for tax paid. They will be the one to collect tax. They will be the one to maintain the record. They will be the one to account for it in front of the government. Is one of the roles of tax administrators. Another role of tax administrator is managing and processing of tax refund application. Tax administrator, they manage and process tax refund applications. Another role performed by tax administrator is conducting tax audit and investigation. Conducting tax audit and investigation. Tax administrator, after the end of the year, they will go to client office, they will go to taxpayer office, they will go and review their record. By means of reviewing their record, they are doing tax audits. Tax administrator, another role that they perform is they advise on the review of tax legislation and regulation. They are the one that will tell government that this tax law needs review. This is what you need to introduce in the next coming tax law. This is what we need in the tax reform. They are the one that will advise the government because it's their field. They know more. So this is role of tax administrators. Now, the next area, this next area is very key. Is very key in this topic. New technology disrupting tax industry. What are the technology? What are the information technology that we use in the tax industry that will aid the job of tax practitioner, that will aid the job of tax consultants, that will aid the job of tax authorities? We call them new technology disrupting the tax industries. One of the new technology disrupting tax industry that help tax industry, that help them to do their job efficiently and effectively is called cloud computing technology. Cloud computing technology. Cloud computing technology. Tax authority make use of cloud. Tax practitioner make use of cloud. Taxpayer too make use of cloud. What do we use cloud for? We use it to save information. Our tax information, we don't need to be printing paper. We don't need to be buying hard disks. Let's save it on the cloud. Even if anything happened to our laptop, even if anything happened to our system, we can recover those information on the cloud since we know our login details. So tax authority, most of the taxpayer return now, they are being saved on the cloud. Every year that taxpayer file return, there is no software, there is no hard disk that tax authority save it to. They save it on the cloud. Tax authority don't need to print return file by taxpayer through tax promas. Before tax promas, taxpayer, they normally file return manually. That means paper return. They will go and bring, they will give them some form. They will fill. They will attach their audited account. Tax authority will even say, I need 4 copies of audited account. But as time goes on, if you go to tax authority office, FRS office, you will see half of their building, they are using it to store documents. They are using it to store what? Documents. Document of taxpayer. They now think, how long are we going to continue with all this paper? Where are we going to store it? Even when you store the document, if you want to go and retrieve the document, the problem you are going to face, you are going to be carrying the document one by one. I'm looking for this company file. Life have gone beyond that. Life have gone beyond paper. Why are we saving on? Why are we printing manually? But when they introduce tax program, most of the information of taxpayer, most of the monthly VAT return file, most of the company income tax return, everything is being saved on what? Cloud, paperless. So cloud computing is good. It helps automated tax computation. It's also help for tax planning and forecasting. It is tax payments. So cloud computing is good. We use it to save information on the cloud using some management software. Though saving information on the cloud is not by free. It's not free. As a tax practitioner too, you don't need to be having hard disk, carrying all your office is now full with working paper. Life have gone beyond that, my brother. You need to buy, you need to subscribe for cloud. be saving your client information on cloud. When you need the information, you can access the information at anywhere since you know the login detail to the cloud. So one of the disruptive technology in the tax industry, cloud computing technology. Oh God, oh God, oh God. Please, this person should mute. Cloud computing technology. The second technology disrupting tax industry is called artificial intelligence and robotics. Artificial intelligence and what? Robotics. Artificial intelligence and robotics. Tax authority makes use of it. How does it work? It works through the task called robotic processing automation software, RPA software. What do we use artificial intelligence for? FRS cannot attend to all the complaints of a taxpayer at a time. FRS cannot attend. FRS have a customer service department that they attend to the complaint of taxpayer. But the customer service department, they cannot attend to all the complaints at the same time. FRS have a contact phone number that you can call to make inquiry, to ask information. But everybody cannot call the phone number on time. Artificial intelligence was introduced to ease the job of FRS, attending to client complaints. Some of the simple questions, little question that client will be asking, some of them have been computerized through a robotic processing automation in the website of FRS. Once you just log into the website, you will see a message. What do you want us to do for you? What do you want to make inquiry about? Once you type your question, if that question is simple, like what is the current rate of value-added tax? When is the new tax law commence? How do I file return? All these things have been computerized into the website of FRS using a robotic process. You will see, you get response to some of those simple questions. Why do we use to do this? So that to save the job of FRS. So that if the line is busy, that AI can attend to your question. Some of the questions attended to by this AI is some simple question. But when you talk about technical question, that means you have to call FRS, you have to visit their office, you have to get their contact, you understand? There's some little question that you don't need to go to the office. Artificial intelligence will assist to do the job. So artificial intelligence offers these following benefits. Zero data entry. It responds to task queries. It helps to learn from tax auditor conclusions. So it provides some solution to some problems. So artificial intelligence is very key. It's one of the disruptive technologies used in the tax industries. Another disruptive technology used in the tax industry is called blockchain technology. Blockchain technology. Blockchain technology. What do we use blockchain for? Blockchain technology is used to gather data about some taxpayers, to gather their information so that we can use it to investigate them if they are not paying tax. FRS can create a blockchain where people can be trading on digital currency transaction. That chain is created by FRS. People will be trading on digital currency transaction, doing Bitcoins, doing online gold, and so on like that. The reason why FRS create that is for them to get information about those who are making profit, who are making gain on digital transaction, so that they can write them, ask them to come and pay tax. And it will be easy for them to do tax audit on them. This is blockchain technology. Another disruptive technology we use in the tax industry is called data analytics technologies. Data analytics technologies. These data analytics technologies, we use it to analyze data. Both tax practitioner, tax practice firm, and tax administrator make use of data analysis technology. It is the center of our job. Example of data analytics technology, Microsoft Excel, all this accounting software, all this software, we are using it to analyze client data so that we can get results, so that we can compute the tax, so that we can file the return. The most common data analysis technology is Microsoft Excel. Tax authority makes use of it to analyze the bank statement of the client, to compute their tax, to compute the additional assessment during the tax audit. Tax practitioners should make use of data analytics technology to help clients compute their capital allowance, to help clients compute their company income tax, to help clients to do some tax planning, analyze their data to get results. So that is what data analysis technology, like Microsoft Excel, all this software, accounting package. So data analytics technology offers some opportunity. It helps to check transaction at source. It helps to review the data, the complete data. It also helps to evaluate program task control. That is it on data analytics technology. Another technology used disrupting the tax industry is called social media technology. What are the social media technology? They are the Facebook, Instagram, Twitter, LinkedIn. We call it social media. Somebody will ask, why will FRS use social media? What do you think FRS can use social media technology for? To disseminate information, to pass information to the client, to the taxpayer. If FRS want to pass information on the changes in the tax law, they will post it on their Facebook page. You know, so many, somebody like a body like FRS, they will have so many followers in their Facebook page. Once they post that information, those who are their followers will be helping them to disseminate it, to share it. If FRS want to remind taxpayer on the deadline for filing company income tax return, they can post it on their Twitter. Those who are following FRS on Twitter, like me, I follow them on Twitter. Once I see the information, I will share it to some of my clients. That information is spreading before you know. That means they don't need to pay before they can pass information. They don't need to announce in the newspaper. Social media will help them to disseminate, pass tax information to wide reach, to reach so many people. Likewise, too, a tax practitioner makes use of social media. Like me, I'm a tax practitioner. I make use of Twitter. I always tweet on the new tax law, on some of the new changes in the tax law. Once I tweet that, so many people will read it, they will like it. At the end of the day, I will put the name of my firm as the publisher. What am I creating? I'm creating value for my firm. I'm adding value to my firm. I'm doing marketing for my firm. At the end of the day, so many people, by seeing that information regularly, they would like to say, Oga, please, we need your service. Come and help us file tax return. Come and help us register for tax. Come and help us attend to this. You understand? I will get more clients from social media. If I'm doing that on Facebook, though I don't use my Facebook, if I'm doing that on Facebook too, many people will like it, they will read it, they will comment on it. They will know the job I'm doing. By doing that, I will get more clients. I will get more revenue, more fee. So that is social media technology. The last technology disrupting tax industry is called mobile app technology. Mobile what? App technology. What is mobile app technology? This mobile app technology, they are the tax promas introduced by FRS. E-tax introduced by LRS. This help clients to access their data at any time. This help clients to save their information on cloud. So mobile app technology provides tax practitioners many benefits, such as on-demand data and information, starting up laptop or computer at any time. That means you can work online without wasting of time. So that is mobile app technology. Now, what are the impacts of new technology? All this new technology we mentioned, what impact is it going to create to tax practice and tax administration? All this new technology we mentioned, artificial intelligence, cloud computing, social media technology, data analytics, what impact is it going to create for tax practice and tax administration? First, using all this technology is going to bring what is called customer satisfaction. You are going to certify your client. Tax authority will they will certify taxpayers too. Introducing tax promas, it helps tax authority to certify taxpayer. It helps the job of tax authority easy. It helps taxpayer to go through less stress. It reduces the stress of the taxpayer. Taxpayer, they don't need to go to client or tax authority office again when they want to file tax return. They can file it online using the tax promas. So customer satisfaction is one of the impacts this new technology we mentioned will create to the tax practice and administration. Another one, low cost of compliance. Using this new technology now, using social media to disseminate information, it will reduce the cost of your compliance. Using tax promas to file your tax return, it will reduce cost of your compliance. Another one, data error will be minimized. By using Excel to compute your tax, error will be minimized. Your data error will be minimized. It will give quality taxpayer information. Another benefit, another impact of this new technology is improve voluntary compliance. People will comply with the tax law voluntarily because it is easy for them to do tax return. They don't need to go through stress of paying in the bank. Everything is done using tax promas. So improve voluntary compliance is one of the impact that is going to create. Now, what are the challenges of technology to tax practice and administration? All this technology we mentioned earlier, what challenge do you think we can face when we want to use them in tax practice or in tax administration? What challenge do we think we can face using all this technology? One of the challenges we can face is low computer literacy level. The literacy level of people using this technology, most of the taxpayers, they don't have adequate knowledge on how to use computer, how to use Excel, how to use accounting package, how to use cloud computing. Their knowledge is very low. This will affect even the tax practitioners themselves. Some tax practitioners don't know how to save information on cloud. Some even don't know what is cloud computing. And they may have the cloud. When you have a Google, in your Google Drive, there will be some cloud on the Google Drive. Though the space may not be too much. People don't know. That is cloud computing. Example of cloud computing, you can see our WhatsApp. If you lost your phone, once you save all your information using your Gmail on your WhatsApp and you normally update it, once you buy another phone, all your information, you can retrieve it from your Gmail, all your message. That is cloud computing. So, but low computer literacy level may affect this to work. If people don't know how to make use of computer, they don't know how to make use of IT. Poor internet service, internet facility. Poor internet facility is also one of the problems, one of the challenges of technology to tax practice and administration. Poor internet facility. The internet facility, when you want to save information on cloud, you have to have internet. When you want to use artificial intelligence, you have to have internet. When you want to use social media technology, you have to have internet. If you don't have good internet, when you want to file tax return on tax promas, you have to have internet. If your internet is not good, this thing may not work. This may not work. Another problem, another challenge is possible cyber threats. There is possibility of cyber threats. All your information can be, all this hacker can get your information on the online. Some of your information can be hacked. Taxpayer information can be hacked. Take for instance, taxpayer using tax promas to pay for tax, and they use one of the staff ATM card. ATM card can save on the cloud under the promise of the client. If another people have access to it, they may get information about that person's ATM number, ATM card number, and that can lead to loss of fund. That can lead to fraud. So FRS, they need to do a lot of job on what is called data protection service. They need to protect taxpayer data on their cloud and in their tax promas. Because when anybody, all these stubborn bots, if they penetrate to their cloud, they can get more information about some of the taxpayer, and they can use the information for fraudulent activities. Another challenges of this technology to tax practice and the administration is high implementation costs. High what? Implementation costs. The cost of implementing all this social media technology, all this artificial intelligence, mobile app, cloud computing, is not free. You have to pay. You have to subscribe. Even the FRS tax promas, every year they will be doing maintenance. They will be engaging some IT expert to come and help them maintain it, so that all these hacker will not penetrate on it. So high implementation and maintenance cost is one of the challenges of technology to tax practice and administration. Another challenges of data validation. Data validation. In the tax promas, if we insert in your tax promas that your turnover, if you want to do your company income tax return on your tax promas, you put that your turnover is 10 million. What you put is what it will generate. Garbage in, garbage out. If your turnover is more than 10 million, tax promas will not know. Tax promas will not query that 10 million you put. Is what you put is that it will generate. Garbage in, garbage out. Challenges of data validation. So these are all the challenges we may face. Challenges of technology to tax practice and administration. The next area we need to look at is IT tools used for tax audit and reporting. This one is talking of the tax auditor, the FRS team that do tax audit. What are the tools that they may use while doing the tax audit and investigation? What are the IT tools? IT tools that they may use that will aid their job while doing tax audit and investigation. One of the IT tools that they may use is called email messaging application. That means they will be exchanging email application. Maybe they have a Gmail or Yahoo Mail. They will be using Yahoo Mail to communicate with the taxpayer, or they will be using Gmail to communicate with the taxpayer, to ask information on the taxpayer. That Gmail, that Yahoo Mail is an evidence on its own that I have asked you this information. Come and see my sent message. Taxpayer too will respond to them via email or Gmail. It's one of the technology tools used for tax audits, used by the tax auditor. Email message application. Another technology tool used is called video conferencing solution. Video conferencing was solution. During the COVID-19 in the 2020, most of the tax authorities can't go to the client office to do tax audit. Most of the tax audit is done online through the use of video conferencing. What are the examples of video conferencing? This Google, this Zoom that we are using now is part of video conferencing. We have another one called Google Meet. We have another one called Microsoft Teams. All these are video conferencing. Tax authority can arrange conference meeting with the taxpayer and the tax consultant to deliberate, to agree on some tax audit issues. Tax authority can arrange conference meeting with the taxpayer and tax consultant too. We participate. They will just arrange for Zoom. 3 of them, they will be discussing. Tax authority will tell them some of the issues highlighted from the tax audit. Taxpayer will respond, this is not what you think. This is what we mean. This is what the transaction, this is the purpose of the transaction. This is the supporting document. Tax consultant too will help them to provide technical advice. At the end of the day, on the Zoom meeting or Google Meet, they will arrange, they will agree on a solution. So this is video conferencing solution. Another one that is used, data analytics. Tax auditor make use of data analytics to analyze taxpayer data during the course of audit. They use it to analyze bank statement. They use it to analyze sales invoice, purchase invoice, general ledger, and so on. Data analytics tools like Microsoft Excel, spreadsheet, all this software, audit command language, ACS software. We use them for data analysis. It aids tax audits. Another technology used is called task management software. This task management software is the integrated tax administration deployed by FRS, the integrated tax administration system deployed by who? FRS. It is called Tax Promas. This Tax Promas, tax auditor use it to detect whether the taxpayer, they are filing return as at when due, or they are not filing return. If they are filing return, how much they file in the return. They will log into the tax detail of the taxpayer to know whether they are doing the right thing or they are not doing the right thing. So the next area we need to look at is the technology deployed by FRS for filing of tax return, payment of tax, the integrated tax system, that integrated tax system deployed by FRS. We want to look at them. That integrated tax system is called Tax Promas. The integrated tax system is called Tax Promas. So the Tax Promas, FRS, Tax Promas was introduced by Finance Act 2020, which mandate FRS to use software for running of the tax administration. This Tax Promas is deployed by FRS for easy tax filing, payment process, and management of tax administration. Tax Promas is an application deployed by FRS for online tax administration management of tax process, automated tax return filing, and payment process. What are the benefits, opportunity tax promise will give to taxpayer? What opportunity or benefit tax promise will give to taxpayer? One of the benefits is registered and file return. It makes taxpayer to register for tax, file return, and remit tax easily. It makes taxpayer to register for tax, file return, and easy remittance of tax. Another one, carry out assessments and keep tracking of tax obligations. It helps to carry out tax assessment. Tax promise will be the one to compute the taxpayer assessment now automatically. Managing withholding tax deductions too. Tax promise help to manage taxpayer withholding tax deduction. It's another opportunity or benefit. Tax promise also help taxpayer to manage their capital allowance and loss. Tax promise also help taxpayer to download tax clearance certificates. Hello?
Material you shared.
Yes, I will reshare it. I know. I will reshare it. I will reshare it. I will reshare the material. Don't worry. After the class, I will reshare the material. Tax promise also help to communicate with FRS on tax issues. Tax promise also help to communicate with FRS on what? On tax issues. So, what are the features of tax promise? What are the components or elements of tax promise? Or what are the services provided by tax promise? What are the services provided by tax promise? One of the services provided by tax promise is called e-registration. It helps company to register, a new taxpayer to register for tax. E-registration, electronic registration. Another one is called e-filing. It helps taxpayer to file their return electronically. We can file return now. Even as I'm talking to you now, I can help one of my clients to file his value-added tax return online at my own convenience. I don't need to go to tax office again, since I know the tax promise login detail. So we can do that. Another one, e-payment. It helps taxpayer to pay tax electronically. Taxpayer don't need to go to bank to go and pay tax. Once they have their ATM card, they can pay tax through the use of tax promise. There is a platform there, e-payment. The e-payment gateway, we carry them to, we ask them, are you going to use remitter? Are you going to use InterSwitch? Are you going to use NIBSS? Another services provided by this is called e-receipt. E-what? Receipt. E-receipt. Once you make payment, tax promise will help you generate FRS receipt. electronically. FRS receipts will be generated electronically. We have another one called e-tax clearance certificates. If you need tax clearance certificates for your client, you can generate it under the tax promise electronically. So e-stamping too is one of the services provided by tax promise. E-stamping. E-VAT collect is also one of the services provided by tax promise. These are all the services tax promise rendered to taxpayers. So how we make use of tax promise if we want to file value-added tax return is stated in this, and how we can make use of tax promise if we want to file company income tax return is stated. So, ladies and gentlemen, this is what we need to know on tax practice in Nigeria. This is what we need to know on tax practice in Nigeria. Tax practice in Nigeria is one of the important topics. Most of the theories, question on ethical issues normally come out like 10-mark question, 15-mark question, most of time that relate to ethical issues or that relate to information technologies, that relate to IT. So we need to take care. We need to take note of this area very well. So some question. I have examinable question here, practice question, and the solution has been provided. So you can lay your hand on it. Try to solve the questions. The solution has been provided. But most especially, this topic is very important. It has ethical issues. It's also talk about information technologies. So ICAN nowadays, in advanced tasks, they normally set a question, 10 mark, that have to relate IT, sometimes 15 mark. So we need to take note of this area. So do we have any question on this?
Yes, sir. So,
Okay.
good afternoon. Please, I have a question with regards to the tax pro max. While going through it, in a situation whereby one has made payment and due to network glitch, the when you want to confirm payment because it's an e-payment and the network goes off and
Okay.
the
Go ahead.
receipt wasn't generated.
What is your question?
Can you hear me, sir?
You can go
you hear
ahead.
me, sir?
What is your
Okay.
question?
So my question is, during paying for value-added tax, usually paid before 21st of every month, and there has
So you
been
can start again.
Can you hear me, sir?
I can hear you now.
Okay. My question is from Tax Pro Max e-payment. Because of network issue in Nigeria, and one has generated remitter and has made payment to FIRS portal, and now the software, the Tax Pro Max, did not generate receipt but threw in an error message. How does one rectify such problems, sir?
You need to visit the office of FRS. There is an officer in charge of tax promise that will help you lodge your complaint to the CBN. CBN will look at it if the transaction was successful. If they will not reverse the transaction within 7 days, They'll help you generate your receipt from the FRS. Your receipt will be generated from the FRS. There's a particular team called Tax Promas team. They are in charge of anything that have to do with Tax Promas. They will, from the system, they have the secondary data. They will check whether the transaction was successful or not. If the transaction was successful, and they have not received it, they will notify CBN. So CBN will undo it. And if they need to reverse your money, they will let you know. If the transaction was successful, you couldn't generate receipt from your own end. So they can help you generate the receipt from their own end. So you
All
just
right,
need
thank
to
you
go
very
to
much.
FRS. Yes. So any other question? So in the absence of no question, within 10 minutes, 20 minutes, the remaining 20 minutes, we take the opportunity to look at withholding tax. So what we need to know on withholding tax is how do we apply withholding tax, practical application of withholding tax, how we apply it. So within 20 minutes, we can finish that and we go. So the next topic we are looking at is called withholding tax management in Nigeria, how we manage withholding tax. This topic of withholding tax, we have done it already in our taxation for skills. So it's just a recap to our knowledge. So it's just for us to just understand some basic thing on this and just serve as a revision to us. What is withholding tax? We know that withholding tax is an advance payment of what? Income tax. Withholding tax is an advance payment of income tax. And is one of the anti-tax evasion policy. It's one of the anti-tax evasion policy introduced to reduce tax evasion in Nigeria. So this withholding tax is not a type of tax, but it's an advance payment of company income tax and education tax. Company income tax and personal income tax. That means when you receive income at certain percentage of the income is deducted as tax at source. And that tax, we use it to offset your final tax liability. So on some of the income generated by company, withholding tax is deducted. On some of the income generated by individual, withholding tax is also deducted. Now, administration of withholding tax. Who administer withholding tax? Withholding tax is administered by both Federal Inland Revenue Service and State Internal Revenue Service. If the payment or the income is received by company, if the income earner, if the person that received the income is a company, the withholding tax will be deducted and remitted to FRS. But if the receiver of the income is an individual, the withholding tax will be deducted and remitted to State Internal Revenue Service. So this is administration of withholding tax. However, if withholding tax is deducted from a non-resident individual, somebody that does not reside in Nigeria, and withholding tax is deducted from their income, that withholding tax will be remitted to what? To who? Federal Inland Revenue Service. What are the features of withholding tax? One of the features of withholding tax is payment of withholding tax is statutory. It's statutory. It is required by the law. We have a law, we have a regulation guiding withholding tax. We call it withholding tax regulation 2024. That regulation started, I think, from this year, 2025. Another features of withholding tax is withholding tax credit note, we use it to offset our final tax liability. That withholding tax deducted on your income. At the end of the year, when you are computing your final tax liability, that withholding tax will be used to offset some of your tax liability. Another feature is that withholding tax can be regarded as frank investment income. That means withholding tax is a final tax on some of the income. If withholding tax is deducted on some of the income, like dividend, that dividend will be referred as frank investment income. That means you will not pay any further tax on that dividend again. Now, what are the benefits or advantages of withholding tax? What are the benefits or advantages of withholding tax? One of the benefits or advantages of withholding tax is it enhances voluntary compliance. Withholding tax, it enhances voluntary compliance because tax will be deducted. Let me explain how it works. If I render service to you, professional service to you, you want to pay me for that service. You want to pay me professional fee. The law make it mandatory for you to deduct withholding tax on my income. If you don't deduct withholding tax, you will be sanctioned. Nothing concerning FRS with me. Nothing concerning LRS with me. It's you that pay me. FRS, State Board of Internal Revenue will be held responsible. So it is compulsory for you to deduct that withholding tax before you pay me the net balance. Withholding tax creates more awareness on taxation. It creates more awareness on taxation. It reduces incident of tax evasion. Withholding tax reduces tax evasion because if you don't deduct withholding tax on some of the income received by some people, those people, they will not report the income to government and they will not pay tax on the income. That is the reason why they will introduce withholding tax. So that while receiving the income, they should deduct some percentage on your income as withholding tax. So that when you report the income, you will use it to offset your tax. If they don't deduct it, in the long run, you may not report the income to government and you will not pay tax on the income. So it discourages tax evasion. Withholding tax also brings unknown taxpayer to tax net. That means it increases tax nets. Withholding tax increase tax nets. Withholding tax also help to bring obscure transaction into the tax nets. So all these are the benefits of withholding tax. What are the challenges of withholding tax? One of the challenges of withholding tax is high rate of withholding tax may likely affect performance of business. If I do a contract supply, the law said you should deduct withholding tax of 5% on that contract supply. If the profit I'm making on the contract supply does not even up to 5%, that means you have deducted more than the profit margin I'm making already. That is loss to me already. So this is one of the disadvantages of withholding tax. Withholding tax, application of withholding tax also affects cash flow position of most of the business. Application of withholding tax also affects cash flow position of most of the business. It discourages hard working by revenue officer. since it is a self-accounting in nature. It discourages hard working by revenue officer since it's a self-accounting in nature. So what are the type of withholding tax we have? We have withholding tax payable. That means the withholding tax you pay on some of the transaction that you deduct withholding tax on. Some of the payments you deduct withholding tax on. So some of the invoice that you deduct withholding tax on, the withholding tax that you pay on it. Why the withholding tax receivable or claimable? This means the withholding tax deducted on some of your income by another parties. The withholding tax deducted on some of your income by another parties. It's called withholding tax claimable or recoupable. Now, what is the due date for payment of withholding tax? What is the due date for payment of withholding tax? If the withholding tax, if the income is received by a company and the withholding tax will be remitted to FRS, the withholding tax must be remitted to FRS not later than 21st day of the following month of the transaction, or not later than 21st day of the following month of payment. But if the income is received by individual, that withholding tax will be deducted by State Internal Revenue Service, and the withholding tax must be remitted. That withholding tax will be remitted to State Internal Revenue Service, and the withholding tax must be remitted to the State Internal Revenue Service not later than 30th day of the following month of the transaction, or following month of the payment for the transaction. So for company, 21st day of the following month. Why for individual, 30th day of the following month? What are the content of withholding tax return? Content of withholding tax return. The name and address of the payer acting as an agent of the government. The name and address of the relevant tax authority to which withholding tax is remitted to. The name and address of the beneficiary from which withholding tax is deducted has been deducted. That means the name and address of the company that withholding tax is deducted from their income. The nature of transaction on which withholding tax was deducted. Is it on rent? Is it on dividend? Is it on interest? Is it on contract supply? Is it on royalties? Is it on director fee? Is it on management fee? Is it on audit fee? The nature of the transaction must be stated. Gross amount of the transactions. Gross amount of the transactions must also be stated in the withholding tax return. The applicable rate of withholding tax. Withholding tax, we have a withholding tax table where each of the transactions have their own rates. So while filing withholding tax return, you must tell them the rate that you use to compute the withholding tax. The gross amount of the transaction means the amount of that transaction before you deduct withholding tax. Another content of withholding tax return, the amount of withholding tax deducted. The amount of what? Withholding tax deducted. The amount of withholding tax deducted. The tax identification number of the beneficiary. The date of payment too. The date of what? Payments. The date in which you pay for the transaction and the date in which you pay for the withholding tax. You remit the withholding tax to the tax authority. Now, what are the exemption and relief under withholding tax? What are the exemption and relief under withholding tax? A company that their turnover is less than 25 million annually, they are exempted from withholding tax deduction. When the amount of the transaction is not more than 2 million. If you are a small company, you want to make a payment to somebody. If the payment is not more than 2 million, you don't need to deduct withholding tax. But if the payment is more than 2 million, you need to deduct withholding tax. However, from your own transaction too, if they want to pay you some service and you are a small company, they don't need to deduct withholding tax if you are a small company. Now, what is the withholding tax rate? What is the rate of withholding tax? The withholding tax
Hello,
rate
sir.
depends on the nature of transaction.
Sir, hello, sir.
Yes,
Hello, sir. Yeah, sir.
I
Please,
can
can you
hear you.
retake that exemption? Can you retake it? Like, if a small business is paying or receiving 2 million naira, we don't have to remove withholding tax out of it. Is that what you are saying, sir?
Yes. If a small business that their turnover is less than 25 million is receiving 2 million naira, maybe from as income, maybe from professional, and that income attracts withholding tax, you don't need to deduct withholding tax since it's a small company. But when the transaction value is more than 2 million, you need to deduct withholding tax. Can you hear me?
Sir, please, sir. Yes, sir. Please, sir. I'm sorry to drag you back, although I want to ask the question, but I want you to finish the explanation. So if you ask, but please let me just ask the question now. Now, if a company, like in my company now, if somebody come and render us a service, are we supposed to deduct withholding tax, sir, if we are paying the person?
Yes, you're supposed to deduct withholding tax.
Sir, please. I'm sorry to disturb the class. Please, so sorry for that. Like from an artisan, are we supposed to deduct from an artisan? And how
You
do
are
I know
supposed.
if the artisan is a small company? Like, I'm just trying to relate what you
Okay,
have
how
said,
do
sir.
you know? Ladies and
If the artisan
the
is a small
artisan,
company.
if the artisan renders service to you using his company name, it's a different thing entirely. But if the artisan renders service to you in his own name, that is an individual. Individual, you don't need small company in an individual. You need to deduct withholding tax. But if it is a company, that is when you say, this one is a small company, it's not a small company.
Hello, sir.
Yeah.
But sir, please, please let me finish my question, please, sir. Sir, please. I'm sorry to disturb the class. So now, how do I now determine that this artisan who's using a business name is a small company? Will I request for a statement of accounts or his financial position? How do I know,
Okay,
sir?
let me explain. Hello. If somebody wants to render service to you, which name does he want to reach to render service? Is he Babatunde Enterprise? Babatunde Enterprise will pay which type of tax? Babatunde Enterprise is a one-man business. It's an individual.
Yeah, it's
It's self-assessment now.
That one company, you don't need to talk about small company to Babatunde Enterprise. That one is under personal income tax. Personal, you deduct withholding tax, you remit it to the state internal revenue. But if it is Babatunde Limited, that is a company. Babatunde Limited will pay company income tax. If Babatunde Limited can prove to you that in his last audited account, he is a small company, you don't need to deduct withholding tax. But if he cannot prove to you, you deduct.
Okay, thank you, sir. Thank you, sir.
Yeah.
But sir, some of these companies, they don't really ask them for their statements to know what they're actually earning, to know their annual turnover.
most times when they submit their invoice, people just go ahead and deduct it tax and remit to government.
So, rate of withholding tax. Rate of withholding tax. What is the rate of withholding tax? It depends on the nature of transaction. Dividend and interest. If the receiver of the income is a corporate company, it's a company, and it's a resident company, withholding tax rate is 10%. If it's a non-resident too, 10%. If the receiver of that dividend or interest is an individual, it's a resident, 10%. If it's a non-resident, 10%. But when we talk about loyalty, if the receiver of the income is a company, either resident or non-resident company, is 10%. But if the receiver of the income is an individual, either resident individual or non-resident individual, is 5%. But if it is a rent, if the withholding tax is on rent, either they are resident or they are not resident, either they are company or they are not, they are individual, it is 10% flat. But if it is management, professional, technical service, professional fee, where audit fee for, if it is an individual, if it is a company and they are resident company, 5%. If they are non-resident company, 10%. If it is an individual, if it is a resident individual, 5%. If it is non-resident individual, 10%. This is the rate. I think in our exam, we may be giving withholding tax rate if need be. Or if there is no need, we need to know it offhand.
Sir. Hello, sir.
Yes.
So sorry. Are you telling me that I need to withdraw withholding tax if I want to pay rent to my landlord?
Yes, according to the law, but we don't practice it. We're supposed to deduct withholding tax from rent. If you go to some big organization, corporate body in VI, Victoria Island, before they pay rent to their landlord, they deduct withholding tax. And their landlord too is aware because their landlord too is educated. But don't go and try it with your landlord in the house you are living in. It will increase your rent. Don't go and try it. It may give you quick notice or increase your rent. But
Okay, thank
it's
you,
supposed to be, that is what the law say, but we are not doing it. We are not doing it. But I believe there will be a time where there will be enforcement regarding that.
Sir, any adjustment to this tax rate in the new tax law?
What do you say?
I say, is there any adjustment to this rate in the new tax law?
To withholding tax? To withholding tax, Abi?
Yes, yes.
In the new tax law, there is no adjustment to withholding tax. Withholding tax has been reviewed in 2024, last year already. They have made review of it. You know, withholding tax is not a law. It's a regulation. Because withholding tax is not a type of tax. It's an advance payment of income tax. The income tax we are talking about, company income tax and personal income tax. So this table I'm giving was the table of the recent law, recent regulation that guide withholding tax. We call it Withholding Tax Regulation 2024, which commenced January this year. They have made an amendment to withholding tax last year, 2024, already. So ask your question. What is your question?
Okay, sir. My question goes thus. I have a business, a small business, sir. I mean, an enterprise.
Please,
to be precise.
This is your question. Can you ask it through DM? so that we
Okay,
cannot
after the
we
class,
can,
Abi.
we can save our time. Yes.
Oh,
So
I'll
that
ask
we
you
need
after
to
the
enjoy
class. Thank
our
you, sir.
weekend.
Thank you, sir.
We need to
Thank
enjoy
you, sir.
our weekend so that we can finish on time and enjoy our weekend. Now, what are the transactions exempted from withholding tax? What transaction that if you carry out the transaction, you will not pay withholding tax? What are the transactions exempted from withholding tax? Number one transaction is across the counter transactions. Across the counter transaction. This across the counter transaction means direct purchases. Some people call it cash purchases. Across the counter transaction means I went to SPAR to go and buy 20 laptops. I walk into the SPAR. I said I want to buy 20 laptops. If I want to pay SPAR, am I going to say I'm going to deduct withholding tax? I cannot deduct withholding tax because I'm the one that went there. It's direct purchase. I carry my money, go. I did not give them contract. I cannot deduct withholding tax. But if I said, SPAR, I want to give you contract to come and supply me 50 laptops, that is contract supply. I will deduct withholding tax. What is the rate of withholding tax on contract supply? It depends on the type of supply. If it is goods and services, 2%. But if it is construction, 2 and 5%. So contract supply is different from direct purchases. I did not give SPAR a contract to supply me laptop. I just went to the counter. I want to buy 50 laptops. If they calculate my money, I cannot say I want to deduct withholding tax. No, that one is direct purchase or across the counter transaction. It's exempted from withholding tax. Another one. Good manufactured or produced by person making the supply. Good manufactured or produced by person making the supply. It's also exempted. Another one is imported good. When you order good, you want to import a good outside the country. You import a good from outside the country. Where you import the good, you cannot tell them you want to deduct withholding tax. No, because they did not fall under your tax jurisdiction. Another one is insurance claim or insurance premium. If you pay insurance premium or you receive an insurance claim, you cannot deduct withholding tax. Insurance company, if they pay insurance claim, they cannot deduct withholding tax. If you pay them insurance premium, you cannot deduct withholding tax. Another one, supply of LPG. Look, LPG means liquefied, what do we call it? Something gas. We have another one.
Natural gas. Liquefied natural gas.
No,
LPG.
liquefied petroleum gas.
Liquefied petroleum gas.
Liquefied petroleum gas. CNG, PMS, AGO. What we are saying now is anything that has to do with contract supply. You give me a contract to come and supply you diesel. To come and supply PMS. To come and supply CNG to your company. When you want to pay me, law says you should not deduct withholding tax. Anything supply of diesel, supply of petrol, supply of gas, supply of CNG, anything petroleum product coming out from crude oil, if you are somebody give you a contract to supply them as contract supply, they cannot deduct withholding tax. Another one. Distribution of dividend under real estate investment company. When you receive a dividend from a real estate investment company, that dividend is exempted from withholding tax. Insurance commission, no, commission paid by a broker on behalf of principals. Commission received by brokers on behalf of principal is exempted from withholding tax. When you receive a sum of money from game, winning of a game or lottery and so on like that, they are exempted from withholding tax. So all these are exempted from withholding tax. Now, when we say direct purchase means sales in the ordinary course of business. What are the factors that constitute sales in the ordinary course of business? What are the factors that constitute sales that will affect sales in the ordinary course of business? When can we say sales in the ordinary course of business take place? Number one, the inclusion of the transaction. That means the object of the transaction. The object of the transactions. Another one, the nature and practice of taxpayer, business and industries. Another one, the history of the transaction. Why the last one is called the frequency of the type of the transaction. So these are the factors that constitute sales in the ordinary course of business. The next area we need to look at is called withholding tax credit notes. What do we understand by withholding tax credit notes? Withholding tax credit note is a document that tax authority issued to taxpayer, which serve as an evidence that withholding tax has been deducted from the income as source. Documents that tax authority issued to taxpayer to serve as an evidence that from the income of the taxpayer, withholding tax has been deducted as source. And that withholding tax credit note, you are going to use it to offset your tax at the end of the year, at the end of the relevant year of assessments. What are the content of withholding tax credit notes? What are the content of withholding tax credit note? Number one content, withholding tax credit note number. Withholding tax credit note number. Number two, the name of the taxpayer who deduct the withholding tax, and the name of the taxpayer who deduct and remit the withholding tax. Number three content, the name of the beneficiary from which invoice withholding tax was deducted. Why another one is nature of the transaction. Nature of the transactions. We have another one, the date of the transactions. The date of the transaction. Another one we have, the name of the bank through which remittance was effected. The name of the bank through which remittance was effected. So this is the content of withholding tax credit note. Now, what are the offenses and penalties relating to withholding tax? Offenses and penalties relating to withholding tax. What are the offenses and penalties relating to withholding tax? One of the offenses and penalties relating to withholding tax is when you fail to deduct withholding tax at source. Failure to deduct withholding tax at source. When somebody failed to deduct withholding tax at source, what is the penalties? Failure to deduct withholding tax at source, we attract a penalties that will be specified by the relevant tax authority from time to time. And that penalty is 10% of the amount of tax not deducted, plus interest at prevailing commercial rates. Failure to deduct withholding tax at source, we attract penalties of 10% of the amount of withholding tax not deducted, plus interest at prevailing commercial rates. This one I mentioned is fail. When you deduct withholding tax, you fail to remit it. Failure to remit after deducting withholding tax, you fail to remit it. You will pay the withholding tax. You also pay penalties of 10% plus interest at prevailing commercial rates. Second penalty is when you fail to deduct. This one, you do not deduct at all. In this one, you will be paid administrative penalties. That administrative penalties is going to be determined by the FRS or LRS, and plus one-off interest. Plus one-off interest. You will be paid administrative penalties plus one-off interest. Now, let's look at differences between withholding tax and value-added tax. Let's look at differences between withholding tax and value-added tax. Value-added tax is an indirect tax, while withholding tax is direct tax. Another difference, value-added tax is imposed on goods and services, but withholding tax is imposed on income. Value-added tax is imposed at 7.5%, but withholding tax rate depends on the type of the transactions. Value-added tax is governed by FRS. Withholding tax is governed by both FRS and State Internal Revenue Service. Value-added tax is shared by 3 tiers of government. Why withholding tax is not shared by 3 tiers of government. So this is the difference. This is the difference between value-added tax and withholding tax. So this is what we need to know on withholding tax. Let's look at some questions on withholding tax so that we can close on time. We are almost late already. Let's look at questions on withholding tax. And number 1 question said, the administration of withholding tax is the responsibility of appropriate tax authority. State the relevant tax authority responsible for administration of the following. Company. Who is the relevant tax authority for company under withholding tax? Federal Inland Revenue Service. For firm, who is the relevant tax authority? State Internal Revenue Service. For professional, who is the relevant tax authority? State Internal Revenue Service. Why for individual too? State Internal Revenue Service. So,
Sir, please,
this
what's
is
the difference between a company and a firm?
firm
And
is
a
a business name. Company is a limited. Firm is a business name. Why company is what? A
limited.
limited. Do you understand?
Yes, sir.
No. Question 5 is where we are going. Question 5 and question 8 is what we are going to look at on this question. Question 5 and question 8 is what we are going to look at. What is question 5? Let's look at question 5. That is what I think is important to us in this place. No, question 4. Is it question 5 or question 4? This is question 5. For the question 5, Adebola Nigeria Limited has been trading for many years. The company makes its account to 31st of December annually. The extract from the profit and loss account for the year ended 31st December 2025 and 2026 as adjusted are as follows. 2025, 2026. We are giving turnover. We are also giving adjusted profit. We are giving bank interest received. We are giving interest on government stock. We are giving rental income. We are giving debenture interest received. We are giving dividend interest received. We are giving dividend paid to shareholders. Required, compute the tax liability for the relevant year of assessment. Ignore capital allowance. We are asked to compute tax liability from this. We should ignore capital allowance. So, how do we compute tax liability? What are the income in this question accrued to Adebola Limited? One of the income is adjusted profits for 2026 year of assessment, 14 million. For 2027 year of assessment, 10 million. You know, it's on preceding year basis now. The year end of 2025 is going to be 2026 year of assessment, while the year end of 2026 will be 2027 year of assessment. The heading, Adebola Nigeria Limited, computation of tax liability for the relevant year of assessment. So, one of the income is adjusted profit. Another income we have after adjusted profit is bank interest received gross. Bank interest received gross means they have not deducted withholding tax. If they have deducted withholding tax, they will write it net. While doing the solution, you have to convert it back to gross. So bank interest received gross, 2.4 million, 1.6 million. Another one is in the question, interest on government stock is another income. This interest on government stock, is it taxable or non-taxable income?
It's not taxable.
It's not taxable.
Yeah.
Anything government stock, treasury bill, development stock, treasury certificate, bond is not taxable. We will not put it. After that, rental income. This rental income, is it taxable or not taxable?
Taxable.
Rental income is taxable.
Yes.
But the right net, the right what?
Net. That means tax will be deducted.
Withholding tax has been deducted, Abi?
Yes.
Now, what do? We need to gross it back. That means this is 90%. The net is 90%. The gross is 100%. We are looking for 100%. And this is 90%. If we want to convert this to 100%, we can say 100 over 90 times this net amount. We'll get the 100%.
That's
100 over 90 times this net amount.
So that's 4 million.
So you can see rental income, 4 million for the first one. For the second one, 5 million. The same scenario. Do you understand? For the second one, 5 million. The same scenario. Do you understand? After rental income, which income follow again? Debenture interest received. Debenture interest received is an income too, and it's taxable. That one is gross already. It is gross already.
So please, why are we getting them back?
Eh?
Why are we getting them back, please?
Because when you want to do solution, they have deduct withholding tax. It is net. If you are doing the solution, if you are computing the tax, you have to use cross amount. Anytime withholding tax has been deducted from income, if you want to solve, if you want to make use of the income in your solution, you must get the gross. You must gross it back.
Okay.
Do you understand?
Yes.
So the debenture interest is gross already. We don't 800. At the end of the day, our total profit for 2026 is 21,200,000. Why our total profit for 2027 year of assessment is what? 17,400,000. After debenture interest, we have another one, dividend. Dividend received, dividend pay. Is dividend taxable income?
Yes,
No,
sir.
sir.
No.
sir.
So that is the reason why I did not add dividend as part of the income. Look at my solution. Dividend is not included as part of the income because dividend is not
So
subjected to tax.
I thought they pay withholding tax on dividend though.
If they pay withholding tax on dividend, dividend is a non-taxable income. The withholding tax on dividend is called what? The withholding tax paid on dividend, frank investment income. That is a final tax on dividend.
Okay, so sir, sorry, you are saying for it to be taxed from the source, it means it does not generate the second level of tax again at this level. Is that what you're saying?
Yes.
Okay.
That
Okay.
tax, that withholding tax paid on dividend is a final tax. You cannot say you will come and use dividend to compute another tax again.
Okay. So if you see it in the question, you should just deduct it, remove it from the computation.
Yes, it's a non-taxable income.
Okay.
So the total profit 21,200,000, 17,400,000. Now, for 2026 year of assessment, if I want to compute the company income tax, what rate am I going to use? What rate of company income tax? What company income tax rate am I going to use? At the end of the day,
20.
I'm going to use 20%. Why? If we add the turnover plus any other income together, you know, the turnover bring adjusted profits. Abi? The turnover is from the turnover we get adjusted profits. If we add 45 million plus 2.4 million plus 6.5 million plus other one, it's not up to 100 million. It's less than 100 million. So your company income tax rate for this one is 20%. 20% of 21,200,000. It will give you 4,240,000.
Please, I have a question.
Okay.
Is it, I just want to get this clarification. Is it that to get our total income for the company, are we going to include the ones that has already suffered tax to know the total income?
Yes.
Oh, okay.
Now, for the second one, the company income tax rate for the second one, I use 30%. I use what? 30%. Why did I use 30%? If we go to the question, the turnover that brings the adjusted profit of 10 million is 94,500,000. If you add this turnover of 94,500,000, if you add 1.6, 5.4, 4.5, every other thing, there will be more than 100 million. That means the total turnover of this company in this year is more than 100 million. In that case, when your turnover is more than 100 million, you use 30%. 30% of the total profit, 30% of 17.4 million.
Sir, sorry, I have a question.
Okay, what is your question?
Sir, does that mean that CIT, because I thought CIT was only based on revenue, does that mean that CIT is based on revenue plus income?
When we talk about revenue, what is revenue and income? We are talking of your total income. Your total income, both your turnover and any other income. That is the yardstick we use to determine your CIT.
But sir, there's no turnover in this your solution.
There's
no turnover in your solution.
In this question, see, look at turnover now. 94,500,000. Plus all the other income we have, 1.6, 5.4, 4.5, 800, everything. When you add it with the turnover, it will be more than 100 million. That is the yardstick we use to determine CIT rates.
This solution I'm seeing here.
Can you please recap this area?
Look at the question. How much is the turnover? For the second 45. One. Not 45. We have used 20% for this. The second one.
94,500,000.
That turnover is income on its own. Plus any other income. What are the other income in this question? What are the other income?
The rental income.
Yes. Bank interest.
Yeah.
Yes. Dividend received. Any other taxable income. Bank interest, 1.6. If you add it to 94,500,000. You add, rental income is own. It's about 5 million when you add the withholding tax in the question. At the end of the day, what I'm trying to get is when you add turnover with any other income, any other taxable income, they are more than 100 million. They are more than 100 million. Do you understand?
Yeah, I understand what you're saying. What I'm saying is in the solution here, the solution that you have here.
Yes.
There is no turnover in the solution.
We don't need to put turnover in the solution now. We don't need to put turnover. We use turnover to determine our CIT rate, whether to use 20% or to use 30%. So after you have gotten your turnover, after you have gotten your CIT, for the first one, your CIT is 4,240,000. You now less withholding tax from your CIT. You less withholding tax that has been deducted from some of the invoice at source. What are the income that attract withholding tax at source? On this, what are the income? What are the income that attract withholding tax at source?
Dividend received has been taxed from source.
No, dividend is not taxable. We do not use dividend in the solution.
Bank interest.
If you look at this solution, bank interest received gross. Interest is subjected to withholding tax.
Yes.
Bank interest received gross. What is the rate of withholding tax on bank interest received? Under the withholding tax rate table, the rate of withholding tax on bank interest received is 10%. 10% of 2.4. This 2.4. This 2.4. 10% of it.
Okay, sir. Sorry, the confusion here is that this is just like a summary of the adjusted profit before we arrive at the taxable income, right? If I'm clear. From the extract of the question itself, we have to now extract the information that is taxable and then prepare your adjusted profit.
Yes.
Okay.
So what I'm saying now is this 2.4, 10% of it. The 10% of it, the withholding tax on it is 240,000. You remove it from the company income tax. This rental income of 4 million, what is the withholding tax rate on 4 million?
10%.
10%, which is how much?
100,000.
You also remove it. The pension interest too, that one to attract withholding tax, 800,000. What is the withholding tax rate on the pension interest? 10%. 10% of 800,000. 80. At the end of the day, if we minus all the withholding tax from the CIT is 4,240,000. That is the company income tax you're supposed to pay. Because tax has been deducted on this income at source, you have to minus the withholding tax. That means the net CIT you are going to pay to the tax authority is going to be 3,520,000. 3,520,000.
I have a
So,
question, sir.
what is your question?
Sir, please, I understand what you've been saying, because I don't understand why you didn't pick the. I just want to have a proper clarification on that. Because if I'm
What
in
do you
Nigeria
say?
now, I want to have like reasons why you didn't pick the turnover. I just want to understand properly.
Why I did not do what?
You not use the turnover. I just want to have like proper understanding on
This
that.
turnover in the question, look at this question. This turnover of 45 million give us what kind of profit? What kind of profit this turnover give us? Adjusted profits. Trading adjusted profits. So if I want to compute my tax liability, adjusted profit that give us trading adjusted profits, any other income, add them together to get the total adjusted profit. I cannot use the turnover in the solution, my brother. What am I going to use? I will only use the turnover to determine what am I using the turnover for? I will use it to determine the company income tax what? Company income tax
The
rate.
rate, sir. Rate.
And in this question, for the second year, I said I'm going to use 30%. Though the turnover is 94,500,000. But if you use turnover 94,500,000 plus any other income, what are the any other income we have? Any other taxable income? 1.6. If you plus it with 94,500,000. Rental income, that one is 5 million. If you plus it with 94,500,000. Dividend interest, debenture interest. If you add everything together, it will be more than 100 million. That is the reason why we are going to use 30%.
Okay.
Do you understand?
Yeah, thank you.
So after this, what is your, after you get your CIT, net CIT, you now complete your education tax. Education tax is going to be 3%. 3% of the adjusted profit. 3% of 21,200,000. 3% of it. Three percent of it is going to give you 636,000. 636,000. Do you understand? When you do this for the second year too. The same pattern you do for the first year, you apply it for the second year. The adjusted profit for second year is 17.4. The company income tax rate is 30%. 30% of 17.4, 5,220,000. You less the withholding tax. When you less the withholding tax, your net CIT is 4,480,000. And you compute the education tax, 3%. That is 522,000. This is the tax this company must pay. Now, second question said you should determine the net withholding tax payable or receivable by Adebola Nigeria Limited. What is the net withholding tax payable or receivable arising from dividend paid and dividend received? Look at it. How much is the dividend I received? This company received. The dividend this company received is 720 for 2 years. Why the dividend that they pay to the shareholder is what? 6 million. This dividend that they receive, they have deducted withholding tax on it. If you want to gross it back, what is the withholding tax rate on dividend for this company? 10%. 10 all over 90 times that 720, it will give you 800,000. That means your dividend received is 800,000. The withholding tax on your dividend received is 80,000. But the dividend this company, Adebola Limited, pay to their shareholder is 6 million. The withholding tax on the dividend that they pay to their shareholder, 10% of 6 million, 600,000. Can you hear me? Hello?
Yes, we can hear you.
Hello, please.
Loud and
My
clear, sir.
laptop, the battery of my laptop is off now, and I'm on mobile, so this is where we are going to stop the class. So in our next lecture, I will explain better. For the VI student too, I will explain better. So let's just stop here. So so we can enjoy our weekend. So I'm sorry, my laptop just off now. I have to use my phone. So thank you for having me. Have a nice day. So there is another question there, question 8. That one is talking about dividend. Please, that question 8, let's look at it. Let's try to study the question 8. It's talking about what type of dividends paid by company that will be exempted from tax. Dividend paid by small company, dividend paid by pioneer company, dividend paid by real estate company, and so on like that. Those are the dividends. So please, let's try to look at that question 8. The solution is there. It's so important to us. So thank you very much. Have a nice day. Enjoy your weekend. Thank you.